Good morning, guys. Welcome to today's Forex market outlook. It's November 16, 2017, and my name is Alejandro Zambrano, Chief Market Analyst with Trade Captain and Amana Capital. We're going to take a look at the Forex markets, but before we start, as always, I need to stress that trading financial markets is unfortunately risky, and there's a genuine risk that we'll lose all of our invested money. So please bear that in mind before you start trading. If you have any issues or questions or concerns really about risk warning or trading in general, check out the risk disclosure on the website. Now, let's take a look at the markets. So this is the euro versus the USD, and the market, rallied quite strongly over the last few days. We, in essence, took out this high, got a proper short squeeze all the way up, but price stalled around the October 12th high here as we start to approach this. Now this makes perfect sense because of the risk-reward ratio. The market had rallied quite strongly from this low here all the way to the high. This was almost 200 pips, so 195 pip without any strong pullback. At the same time, yesterday we had slightly higher core inflation than anticipated in the US, and the headline retail sales number as well was better than expected. So it did make sense that traders wanted to book some profits. Now going forward, if you look at the overall structure of this market, you have a high up here, another high here, and then another high here. So I'm still favoring this to at least go down to pretty much 116.93 as long as we cap by 118.82. Here's the pound versus the USD, and yesterday's numbers from the UK overall a little bit better than expected, but not like by any major change or any way we should alter our position. It wasn't really that good, but it wasn't bad. And the market itself is stuck within this range. Now obviously, check out this high here created on the 10th, and the market might rally a little bit higher, maybe to 133. But that's not really enough for me to be interested in trading this. Rather, I want to see a break to the upside or a break to the downside, with this downside level being the 130.31 level and this high being the 133.37 level. If we break the upside, most of the time you take out a high, goes to the next high. On the other hand, take out a low, I will touch next low. So this is really the range that I'm working with. If you're looking at it from a long term sort of perspective, then obviously the overall market is bullish. As you can see, the price is trading higher and higher low on the daily. So if we combine the big picture with the short-term charts, it does suggest a price to the upside. But you have an issue because on the one hand you have the Fed that wants to increase interest rates, and you have the Bank of England that just increased interest rates and could potentially increase interest rates maybe with 1% or so over the next 1.5 years. Here's your dollar yen. Now the dollar yen took out this low, which turned the short-term trend bearish. So for now, this market could potentially just do this and continue to, test yesterday's low and the low here created on the 19th of October. However, we need to be careful. I'm more of a dollar bull than anything else, but if we just stick to the technicals for now, below 113.93, the short-term trend is bearish and market could potentially roll over and just move to the downside. Here's the Aussie dollar versus the USD. So last time we looked at this, we said that traders are probably going to look to sell up here, and that happened perfectly. Went all the way down to 75.70, which was the target. And now I think we could most likely continue to see this market continue to head down lower because of the overall bearish trend. And the trend will be bearish below 77.06, which is this level up here. And most likely on a bounce, so a test of this breakout level, so pretty much 76.12. Starting from that level and higher, I suspect traders are gonna look to sell, and they will probably remain bearish as long as trade below 77.06. We can use the daily chart. So here's your daily chart, and we're going to use it to derive profit targets. So the next low here on the daily, which is of interest, is the June 22nd low of 75.34. So the trend is bearish and could potentially reach that level, take out this level, and that really opens up for a decline down to 73.72, which is a low here created in the beginning of June. So with this in mind, as long as you trade below 77, I suspect traders might look to sell here and target the lows. This is at least what I think is going to happen. It doesn't have to happen, but this is what the technical analysis just will happen. Now here's the New Zealand dollar versus the USD. So last time we checked at this, we said that the market is bearish up here. You can see the market moved down exactly as we anticipated, a bit like the Aussie dollar. And the market is down with about 96 pips since then. If we look at the daily chart, you'll see here that as with the Aussie dollar, this is overall bearish. And you have the 68.21 level, which is a really interesting level, because take that level out, and the next daily low is down here, which is a low created on the 27th of May 2016. So this should be a relatively easy and straightforward decline down to 66.78 on a break of 68.19, which is this level here. And if you're focusing on the 4 hour or the 30 minutes, 1 hour really, which is actually my preference. There's two ways of dealing with this. So if you want to trade with the trend, one is just wait for the break to 68.19. The alternative is just, which I suggested to the clients of Amana and Londinium FX, and that is that here the market could roll over from these highs and do like this. The level you're watching here, or the level 2 watch, is 69.04. Here's your CAD. So when we did the non-farm payroll setup last Friday, we said, it's actually Friday 2 weeks ago already, we said that here people are gonna sell for this to go down. It took a few days just because the markets are quite sluggish overall, but we reached the profit target. And going forward, you know, as long as you trade below this high here, which is the 128.28 level, I do suspect that this market can continue to move down lower. And I just see this as a corrective phase or corrective move. I see this little short-term uptrend as short-term, if anything more. And I suspect that this market could potentially end this little downtrend and move down to its low. And I'll remain bearish as long as trade below 28.28. What else? Well, as you know, the euro has been quite strong lately, so things you can check out, it would be, for example, the euro New Zealand dollar and euro Aussie dollar and the euro yen. If you click on technical analysis and short-term analysis, you'll see that I posted an article about this yesterday. Euro crosses are sharply higher. What's next? So this is an interesting little setup. You can see here how the trend is clearly bullish in the euro Aussie. It's close to the highs here from May. The market is definitely overbought, but a pullback, maybe 53 or so, could interest people. And there's several markets here actually to watch. And in fact, this whole section under news, or sorry, technical analysis and short-term analysis, check that out if you like technical analysis. I'll post an article or two every day here. Yesterday we also looked at gold. Today we're looking at the S&P. And you have these videos, which are usually found on the video reports. And you'll find some interesting setups. For example, we did the crypto market outlook in the beginning of the week. We have special videos with me and other videos that we do as well. We provided a very nice update on cryptocurrencies not so long time ago, where we said that a pullback traders are most likely going to look to go long, which they did. So check this out. What else? If you're interested in webinars and education, we have this webinar coming up on the 23rd, which is an introduction to Bitcoin trading and blockchain. We have had a huge amount of people asking about this and huge amount of signups. So check this out. As well, if you're more of a novice and want to learn more about Forex trading in general, then we have the special webinar coming up, and then we have the crypto trades of 2018. So you have these webinars and other educational stuff like videos, trading guides, and so on and so on. So check it out. If you have any questions, just send me a message to AlexFX00 on my Twitter. So AlexFX00. And as well, under this little section down here, you can click on Contact Us here, and you can reach out to us. Thank you so much, guys, and I'll see you guys soon. Thanks.